how today or swing trade S&P 500 stock index in 2016 like a master, a part 2. How today or swing trade S&P 500 stock index in 2016 like a master, a part 2. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magd.com. The title of this video is How Today or Swing Trade S&P 500 Stock Index in 2016 like a master. Okay, part 2. All right. So if you have not watched part 1, we recommend to trader to watch part 1 because this is a continuation of part 1. So we want to share with traders new trading tips that they can use, especially 2 key levels that I have today to share with traders, so they may pay attention to that, okay? But before we continue, we want to show traders what has happened so far, because the first part of this video was recorded on the 1st of February 2016. So today is 28th of February 2016, almost the end of the month, and we want to see so far what has happened since the 1st of February 2016 after recording this video. So okay, let's zoom into the chart. You can see I'm going to place a vertical line on the daily chart. That's fine. Okay, I'm going to place a vertical line exactly where I recorded this video on the 1st of February. I recorded this video, and the first part of this video, I recorded the first part of this video on the 1st of February. That's the vertical line there. And you can see the line that I have on my chart here, except the pink line. These are new line. The pink line is a new line, and also the orange line. But everything else was here before, since the 1st of February 2016. Okay, so the price, as we recorded the video, the price, there are other lines that I mentioned to trader, but I did not stress on it. 1934, we didn't note it down, but we talked about it. 1917, we talked about it, but we didn't put too much attention to them. Okay, they are here, 1934, 1917. But the level that we were sharing with traders, we have 2 key levels here. 1867, essential key support and resistance level that one cannot afford to forget in 2016 if one is trading the S&P 500. So 1867, look what's happened. So from the first, the price going down, going down, going down, going down, going down, okay, was bearish. It's in a declining channel. So if you were buying this, if you were busy day trading, buying the S&P 500, you are violating the market pattern. Why? Why? How do we know? Because the price is in a declining channel. Therefore, priority to bearish signal. So if you were busy buying, you were contract trading. So hopefully, okay, you contra trade carefully, all right? So I'm not saying that it's impossible, so maybe you survive it, okay? But normally in this scenario, it's priority to bearish signal. 1, 2, boom, down, 1, 2, boom, down, okay? Here it is on the edge of the bearish trend line. So as the price going down, pay attention to the level of 187, okay? Price D below that key level. Remember, the key level, break below, retest, break above, retest. So here it is. It breaks below it with this candle here. All right. And then it came back the following day to retest it. You can expect it. Break below a key level, following day. In fact, it break below it, went all the way to the next key level, which is a 1845. Did you forget that? What's the level of 1845? Check the first part of this video. The 1845 key level is the opening price of 2014. Here it is. Professional know that level, 1845. So if you are looking for trading setup, high probability trading setup, look for those high probability trading setup that are happening, that are taking place on or near those are essential key support and resistance level. And last time we have shared 7 key level. The first key level is 2134. So if you have not watched it, note it down. 2134, 1867, 1996, 1845, okay, 1737, 1632, all right, and 1471. So we already know 1867 is what? All right, 1867, which level is that? Is the low of 2015. All right, so the price came down all the way to, okay, the level of 1845, which is the opening price of 2014, all right, and then now went back up to retest, okay, all right, the low of 2015 at 1867. Right below, went to the next. So price is going down. Price is looking for a better support level. So we want to know where are the essential support level. So start going down. You see, you know that, okay, there's one here, 1867. The next one below, 1845. We want to monitor the reaction of the price and look for high probability trading setup. Remember, this tutorial is to draw the attention of traders that we are trading the price, not the technical indicators. Though we use technical indicators, we must draw trend line. If a trader starts using a trend line alone, he or she will improve trading decision. But most importantly, when traders start avoiding, okay, the 7 biggest trading mistakes at dayprotrader.com, the 7 biggest trading mistakes, traders start improving. But the key, the number one, is, okay, the violation of market pattern. As you can see here, the price was in a declining channel, yes or no? All right, priority to bearish signal. Price displaying lower lows, lower high, priority. Here we have a new channel now. Where are we? We are now in a rising channel, okay? So from the 1st of February 2016, the S&P 500 went down up to the 12th of up to the 12th of February 2016. And from the 12th, we see a new pattern that has begun. We have a rising channel. No violation of the market pattern. And again, the forbidden trading mistake is what? The violation of the top-down trading method. The setup, the signal, and the low-risk entry point. We want to spend more than 70% of our time on the trading setup. And we want the trading setup to be somewhere near one of those essential key and support level. Very simple. We don't want to overtrade. We are not interested in useless trading setup. We want to focus on high probability trading setup. Why? Because the high probability trading setup will generate high probability trading signal at a low risk entry point. All right, that's why we want to concentrate on high probability trading setup instead of focusing on useless, crazy trading setup. But the bottom line is that traders are spending their time looking for trading signal. No, don't do that. Spend your time looking for the best trading setup. Okay? Spend your time validating trading setup. If you are trading or you take a signal and you know that, oh, something is not adding up here, what do? You go back to the setup. All right? So this tutorial is trying to help traders to adopt the mindset of professional traders that are trading the S&P 500. So we have given 7 key levels. Today, I want to give you 2 more key levels. The first key level is the long-term equilibrium price level. This level, if you forget every other level, you don't want to forget this one, okay? So the long-term equilibrium, the first long-term equilibrium price level for S&P 500 in 2016 is 1962. It's great to know. Take it from me. It's my own proprietary trading tool, but I'm willing to share that level with traders. But I will not reveal to you the formula that I use to calculate, okay, the long-term and the short-term equilibrium price level. But I can, if you are TSTW trader, or whether you are TSTW24 trader, TSTW-SY008 trader, and you are trading stock listed on the NASDAQ 100, stock listed on the, okay, S&P 500, okay, Dow 30, you can contact me if you are trading one particular stock. You want to say, Joe, what is the long-term equilibrium price level for this stock? I will give it to you, okay? I will give it to you, okay? All right? So you can contact me on my Gmail, all right, which I share with TST traders, and I will share with you, all right? Okay, so here we are. So the long-term equilibrium price level for the S&P 500 is 1962. Don't forget that level. 1962 is the peak line here. In fact, with this level was in place, okay, since, 2 weeks ago. And you can see on Friday where the price did stop. Friday, the 26th of February 2016. Look, right, well, you see, it went up, boom, to touch it. If I switch my pink, pay attention to the pink line, okay? If I go, it's great to know, isn't it? It's great to know that level, isn't it? Beautiful. Look, price going up, everybody expecting it's going up, it's bullish, bullish. We know that this is a very important level, 1962. I know, because it's my own proprietary trading tool. This is not part of the TST trading system. All right, don't buy TSTW24 CSY008 because of this thing, okay? But you can contact me, all right? So here we are. This level is a very important level, and it's here. Boom, 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 bam, hit it. So what do we say to traders? Let me go back again. I was on a daily chart, okay? So what do we say to traders? This level 1962. If the S&P 500 stock index breaks above the level of 1962 and find a support, value support, and start displaying higher lows and high, we want to give priority to bullish signal above the long-term equilibrium price level. The position traders, the hedge funds, the financial institution make their decisions around the long-term equilibrium price level. Okay? So somewhere in August 2016, I will be giving traders the second long-term equilibrium price level for the S&P 500. But this is the first, okay, long-term equilibrium price level for the S&P 500. And you want to know, it is 1962. We will give priority to bearish signal below 1962. All right, so here it goes up, we touch it here. We will monitor the reaction of the price. We can look for bearish chart pattern, bullish chart pattern above, okay? And then use a top-down trading method to trade it without violating the market pattern, okay? Very simple. We want to simplify all the blah, 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 okay? Cut it to the bone, all right? Concentrating on the price, the market pattern, a top-down trading method, all right? Avoiding the 7 biggest trading mistakes. Concentrating only on high probability trading setup that are occurring on or near, okay, the high impact support and resistance level. This is how the professional traders are trading the S&P 500. As I explained to you, you see this level here, 1845, 1867. Professional traders know those key levels. It's not by mistake the price goes down, went back out to retest it. Now you find a resistance there, come back down to the next key level, find a support here, and then start going up. Okay? As the price going up, you can see here, the price just printed it. From here, it just printed, boom, 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 boom. Okay? 1917 again, which we mentioned. Not a very important level, but we mentioned in 1917. 1934 also here. You see what's happening around those key levels. That's where we want to trade. Now we have a new key level, 1962. The father of all key level for S&P 500 in 2016, the first key level, okay? The next key level that I promised to share with you today is, okay, the short-term equilibrium price level for the S&P 500. Now remember, the long-term equilibrium price level will remain in place throughout the whole year. It's great, isn't it? Now, the short-term equilibrium price level is quite, okay, dynamic. It's changing quickly. So it will change every 2 weeks or so. Sometimes you will see for some talk, the short-term equilibrium price level can remain in place for 3 weeks, even 4 weeks. But generally, on average, the short-term equilibrium price level will last for 2 weeks or so. Sometimes you go to 3 weeks. All right. So this is it. For the next 2 weeks, the level that we must watch, swing traders, 1 week already passed. You see this candle here. This is a beautiful buy place. The tail. Look at this. Pay attention to this green spot here, because I want to change my time frame. Okay, go to another time frame. I'll go to the 30-minute time frame, a very important time frame that professional watching. Look at that. This is the short-term equilibrium price level. Price form. This is a. By the way, this is a high probability trading setup. Okay, why? Because why? You need to know. Because the price form a kind of double bottom pattern. A double bottom pattern. The knot is broken, and the price form a higher low. It's a high probability trading setup. You know, you want to know your setup, you see, must click. double bottom pattern followed by a higher low above the nut. This is what I call the nut. Followed by a higher low above the nut is a high probability trading setup. Once again, we will use the top-down trading method without violating the market pattern. The top-down trading method is the forbidden trading mistake that one cannot afford to repeat all the time. I'm saying this to new traders, okay? So work on it, please. Work on it, okay? All right? Work on it, please, okay? Here we are, it is, yeah? High probability trading setup on here, the short-term equilibrium price level. The short-term equilibrium price level, so the current short-term equilibrium price level for the S&P 500 is 1881. 1881. So watch it, okay? Next week, that key level, okay? Watch it, okay? The following week, until, okay, you ask me or I posted another video about, okay, the new short-term equilibrium price. In fact, I will be creating a web page where I'll post for traders the long-term equilibrium price level and the short-term equilibrium price level, okay? Because I'm a busy bee, okay? Give me some time and I will create a web page where they can go anytime and check the long-term equilibrium price level. If you are trading American stock, okay, or any indices, okay, you may know the short-term and the long-term equilibrium price level. So for today, 2 key levels we are adding to the previous key levels for S&P 500. The long-term equilibrium price level 1962, very, very important. The current short-term equilibrium price level 1881 will remain in place for the next 2 weeks or so. All right? This is about how today or swing trade S&P 500 stock index in 2016 like a master. Part 2. This is a continuation of part 1. We recommend to traders to watch part 1 so they may understand what we have discussed already because we don't want to repeat ourselves. In this video, we add 2 more key levels. So in total, we have the level of 2134, 1867, 1996, 1845, 1737, 1632, 1471. Now we have 2 more key levels, 1962 and 1881. The level of 1962, which is a long-term equilibrium price level, will remain in place throughout 2016. That's where the hedge fund, the big financial institutions are likely, okay, to make decisions. They will give priority to bearish signal below, and they will give priority to bullish signal above. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders, talking about how today or swing trade S&P 500 stock index in 2016 like a master, a part 2. Speak to you soon.